Hello everyone, I'm Daniel Lader, founder of Lader CPA and Associates, and welcome back to our Instagram Live series where we are talking about building a successful private practice from beginning to infinity. So we have to start off with that all-important question. Why did the therapist and the accountant become best friends? Because one helped people let go of their past and the other helped them write it off. So, continuing in the continuing trend of telling great jokes followed by useful information, let's get into the useful information part of it. This week, we're going to be talking about startup costs and how they are tax deductible and what they are, especially for new therapists or therapists who are branching into additional ventures. So, let's get into it. First off, what is a startup cost? Actually, before we get into startup costs, let me back up a little bit and tell you about who this is going to benefit, who this information will benefit the most. New therapists starting out in their office will see some benefit to this information, but more important is that this information will be for therapists who are opening new ventures. Think of starting your own wellness center as a business activity, or starting a new separate office, or think of starting a new type of therapy office, equine therapy, art therapy, something new and different than what you're already doing. Any new venture. This is going to apply to both therapists. So let's get into it. What are startup costs? Now, the startup costs are the expenses you occur before the business officially opens. Now, here's the problem. The IRS defines business expenses, deductible expenses, as occurring during the existence of an active trade or business. Any expenses that you have before you set up and start your business and it operates, all those expenses are not deductible. These are the startup expenses we're talking about. And I'll tell you how they can be deductible, but technically they're not deductible. So keep that in mind. This includes all of your expenses where you're looking to register your business as an LLC or other form, all of the expenses you have for getting that business ready to start. This could be your the fees you pay to professionals to help you, lawyers, accountants, whoever. This can also include things like paying salaries or contractors for whatever work you need them to do before the business is operating, paying things like office rent, utilities, those kinds of things. Those could all be considered startup costs if you're paying them before your business starts. So that's the issue we're addressing here. They're not technically tax deductible yet. We're going to talk about how they can be tax deductible. It's easy, but for this topic, you're going to want to talk with a tax professional to help you work through the intricacies of it. We're going to be talking about startup costs on a high level here. The level you are going to need is that nitty-gritty detailed level, but we're going to instruct you on the high level first. Now, once again, the types of expenses that can qualify as startup costs are your any initial advertising expenses you're paying, wages, salary, fees to anyone any expenses that are occurring before the business is operating. Now, this begs a big question. When is the business operating? When are these no longer startup costs? In some situations, that's pretty clear. Picture a store, a grocery store. It's operating the moment it opens its doors to customers on opening day. Now, for therapists, it's a little different. Obviously, some of you don't even have doors to open, and you're starting to schedule clients before you would have doors that could open, if that made any sense. So, I like to think of the operational start date of a business as the day that it begins looking for and interacting with potential clients. This could be as simple as the moment you start putting clients on your calendar. Something along those lines. Talk with your tax professional, get an idea of what that operational start date would be. From that point on, all of your expenses are regular business expenses. But before that, there are all these startup expenses we're talking about. Now, the way the startup expenses, like we said, they're not technically tax deductible yet. However, the IRS does allow startup expenses to be deducted on your tax return in a special way. And this is where you want a tax professional to help you. But the IRS allows up to $5,000 of your startup costs to be deducted in the first year, to be deducted on your tax return. Now, anything more than $5,000, that would be amortized over the next 15-year period. Meaning over the next 15 years, you have to slowly recoup that cost on your tax return. Simple example, let's say you have startup costs of $35,000 for something. You tell me what that is. But $35,000. That first $5,000 you can deduct immediately on your tax return. The next $30,000 has to be spread over 15 years. That comes down to $2,000 a year that you can deduct for that original $30,000 or $35,000 that you had. So you can see why we want to avoid having too many things qualified as startup costs. We'd rather have them be regular business deductible expenses. And here's the next little key. When you have startup costs that are above $50,000, then that $5,000, that first $5,000 you can deduct, it starts decreasing dollar for dollar after you're passing $50,000. So if you're spending $55,000 on startup costs, zero will be deductible in the first year. All of that will be spread over that 15-year period. Not ideal. Now let's talk about some things that will make you feel better about that situation. Any of your equipment, furniture expenses, buying computers, buying couches, any of those expenses, those are not considered startup costs. As soon as the business is operating, you start depreciating those costs as normal. A lot of those costs, you can take a big chunk of that through bonus depreciation or Section 179 depreciation right away in the first year. Talk with your tax professional about those too. But any equipment that you're buying, that is not part of the startup costs. I know a lot of you may have some big outlays for furnitures, for computers, whatever those are. Those are not what we're talking about here. Now, one of the best ways to manage your startup costs is a callback to what we talked about in past weeks. Keeping good records. This is where your accounting and bookkeeping software or system comes into play. You will be much happier knowing and tracking those startup expenses on your software so that they can be properly accounted for on your tax return. You don't want them to just simply disappear. You also can't deduct them on your business tax return as just a regular expense. They have to be qualified as a startup cost, and that's where your accounting software will come in really handy, giving you the dates that that transactions were incurred, expenses were incurred, so you can keep track of those much easier. Now, one item that is worth considering is not all of your expenses need to be startup costs. Remember, the qualifier for being a startup cost is that you purchased something, you paid for something before your operational start date. If you don't need it before your operational start date, do it after. Then it's not even an issue. We don't have to look at it as a startup cost. Let me just use a real easy example that I think we'll all understand. Let's say you need to rent an office space. You rent it $1,000 a month. You rent it 7 months before your operational start date. I don't see any of you doing that. That's kind of not necessary, but let's say you do rent it 7 months before, paying $7,000 a month. That's or $1,000 a month. That's $7,000 total. As we talked about, even rent expense before your operational start date is a startup cost. So you've just accrued $7,000 of startup costs. I don't know why there's balloons there. $7,000 of startup costs. That wipes out your $5,000 you can deduct now. Plus now you've got to carry over everything else for that 15 years. Easy solution would be just to rent the office much closer to your startup date. Now that's a really easy example, but what I want you to take from that is any large expenses that don't need to be a startup cost, do them after your operational start date. The second strategy and good idea we can use is managing what your operational start date is. Now, like we said earlier, something like a grocery store has a real easy to determine operational start date. Opening day, front doors open, it's an active trader business. Everything after that is no longer a startup cost. Therapist, it's a little less defined, and we can use that to our advantage. Remember what I said, a good rule of thumb to find your operational start date is when you start interacting with clients. If you know you've got a lot of big expenses to get something set up, let's say you are doing a wellness center and you have to make a lot of outlays to get that building, that property, everything, equipment and furniture you need for that, why not start seeing clients before you make those big expenditures? Get them on your calendar. You can book them, you can book people months in advance. You can show that you're operating as a business. That will let you have a sooner operational start date. So a lot of your big expenditures, they don't have to be considered as startup costs. So take that information, take that advice to your tax professional, see what they can help you with. I hope you're working with a tax professional during this whole process of starting up your business, so they can give you this kind of information to help you make better decisions. Now there's a couple of mistakes I hope you don't make. They're easy to avoid. First, like we said, track your expenses, use accounting software. Second is don't mix your personal and business expenses together. It will be very hard to figure out all those startup expenses so you can deduct them if they're mixed in. You have a separate bank account. We talked about this on prior sessions, having your accounting software, having your bank account set up for the business. This is all just kind of culminating as we start your business going. Now, again, work with a tax professional. Keep that tax professional updated on what you're doing so that they can help you make those decisions. And if you have any questions about this information, feel free to DM me any comment on this video. Ask any questions and I'll get to them when I'm able to. Startup costs is one of those high-level concepts that it's important, but it's very detailed and very nitpicky. You'll want to work with a professional who can help you. If you have someone in mind and that you're working with already, great. Otherwise, leave me a comment, leave me a DM. Happy to help you with what I can. Now, why are we even talking about startup costs? Why does this matter? Well, we talked a little bit about it at the beginning. The IRS has pretty defined rules. And how I prefer to run businesses is following the rules. And for these tax rules, that means doing what is necessary, including startup costs. Now, I want you to not be worried about things like IRS audits. That's not why I talk about rules anyways. An IRS audit has a really low percentage chance. Don't be freaked out and concerned and doing the rules just because you're afraid of an IRS audit, because you'll find that there's a really good chance you'll never see an auditor anyways. And then you might get the idea that the rules don't matter. Don't fall into that trap. Follow the philosophy I use, that there's rules to be followed, and just run a legal and ethical practice. So that's why we're talking about startup costs. I don't think any of you are going to be audited for what your startup costs were. So I wouldn't let that hang over you at night when you're lying awake thinking about other things to worry about. But again, it's all about following the rules, being legal and ethical, and doing things the way the law of the land says. Now, again, I mentioned if you have any questions, feel free to comment or DM me. If you do want to talk more about your business situation, go ahead and send me a DM. We'll send you a calendar link. You can get on a calendar. We can have a free 30-minute discovery call to talk about your needs and how we can fill them for you. Now, remember, go ahead and follow and subscribe so you can be aware of future events and tax tips that we're offering. And visit our website, latercpa.com. I will see you on the next video. And have a great weekend, and remember to keep helping others to help themselves. Bye.